In international diplomacy, sometimes the loudest message is silence. August 2025, Japan's top trade negotiator, Ryosei Akazawa, was set to fly to Washington to finalize a landmark trade deal, but at the last minute, the trip was abruptly cancelled, postponed indefinitely. The official reason? Further consultations are needed. Translation: something went seriously wrong. The sudden cancellation sent shockwaves through financial markets and diplomatic circles. Japan was signaling that the deal, announced with fanfare just weeks earlier, was now in jeopardy. This wasn't a minor hiccup. It was a deliberate public statement that trust had been broken. The promise of a new era in US-Japan trade was suddenly on life support. What happened? A tangled web of miscommunication, a double tariff blunder, and clashing egos. The fallout would reach far beyond Tokyo and Washington. So, what was this deal that unraveled so spectacularly? Announced in July 2025, it was meant to reset the turbulent US-Japan trade relationship. The US would get a $550 billion Japanese investment package, money for infrastructure, jobs, and industry. In return, Japan would get relief from punishing tariffs, especially on cars and electronics. For Japan, this was about stability and survival for its export-driven economy. The deal promised to cut tariffs from 25% to 15%, a lifeline for Japanese industries. For both sides, it was supposed to be a win-win, a model of economic partnership. But beneath the headlines, the details were a mess. The devil was in the fine print, and that's where everything fell apart. What looked like a triumph was actually a ticking time bomb. The deal's foundation cracked over one issue: tariffs. What seemed like a straightforward negotiation quickly unraveled, exposing deep misunderstandings and a lack of trust between the two sides. From Japan's perspective, the expectation was clear. The 25% Trump-era tariff on autos would be replaced by a single, much lower 15% rate. This reduction was not just a number, it represented a crucial step toward restoring competitiveness for Japanese automakers and strengthening economic ties. But when the US draft order arrived, it told a very different story. Instead of replacing the old tariff, the new 15% was simply added on top of the existing 25%. The result? A staggering 40% tariff, an outcome that would devastate Japanese exports and send shockwaves through the industry. US officials quickly admitted the error, assuring their Japanese counterparts that it was a simple mistake and would be corrected. Yet, as days turned into weeks, no official correction came. The silence grew louder with each passing day. For Japan, this wasn't just a clerical oversight. It felt like a sign of either incompetence or, worse, bad faith. The lack of urgency in fixing such a fundamental error raised serious doubts about the US commitment to a fair deal. As the correction failed to materialize, trust between the two nations began to erode. What had started as a promising negotiation now seemed to be slipping away, replaced by suspicion and frustration. Meanwhile, Japan's powerful auto industry was growing restless. Executives demanded written guarantees that tariffs on vehicles would indeed drop to 15%, not just vague promises that could be retracted or reinterpreted later. The US response was underwhelming, offering only verbal assurances with no clear timeline or binding commitment. For Japanese negotiators, this lack of clarity was unacceptable. The double tariff blunder, combined with the ongoing uncertainty over auto tariffs, transformed what should have been a done deal into a full-blown diplomatic disaster. Both sides were now at an impasse. Frustrated and out of patience, Japan slammed the brakes. They refused to sign any agreement that left such critical issues unresolved. The message from Tokyo was unmistakable: fix the basics, or there's no deal. Without trust and transparency, even the best intentions can fall apart. As the clock ticked and the sun set over Tokyo, both sides knew that time was running out, and that patience, once lost, is hard to regain. If tariffs were the spark, the $550 billion investment package was the fuel. The US touted it as a windfall, Japanese money for American projects, with the US keeping 90% of the profits. But Japan saw it differently. The returns would be split based on each side's actual contribution. The 90-10 claim was never agreed upon and infuriated Japanese officials. Publicly, Japan had to correct the record, insisting this was a partnership, not a handover. The two sides couldn't even agree on the basic mechanics of the deal's biggest element. This wasn't just a PR problem. It was a fundamental trust issue. Was this a genuine partnership or a one-sided transaction? The confusion over who controlled the money exposed deep rifts. The $550 billion question mark was too big to ignore. While diplomats argued Japan's economy was already hurting, in July 2025, Japanese exports saw their biggest drop in 4 years, driven by falling shipments to the US. High tariffs made Japanese goods more expensive and less competitive. The government slashed its growth forecast from 1.2% to 0.7%. The pain was sharpest in Japan's industrial heartland, with manufacturing profits falling and investment stalling. The uncertainty was paralyzing. Companies couldn't plan, invest, or protect jobs. Japan needed real relief, not empty promises. The canceled visit was a calculated move. Signing a flawed deal would only make things worse. The stakes were economic survival. This wasn't just a US-Japan story. Asia was watching closely, with millions across the continent glued to news updates and government statements. From bustling metropolises to quiet rural towns, people wondered what the fallout would mean for their own futures. For decades, the US has been the anchor of Asia-Pacific stability, providing security guarantees and economic opportunities that shaped the region's growth. American presence was seen as a steadying force, a partner that could be counted on in times of uncertainty. But this fiasco raised doubts about America's reliability as a partner. Allies like South Korea, who have long depended on US support for both security and trade, suddenly found themselves questioning the strength of those commitments. And Taiwan, always alert to shifts in international alliances, saw the double tariff error as a warning sign, proof that even close friends could make costly mistakes. If the US can't get it right with Japan, its closest ally in the region, what does that say about its ability to manage more complex or fragile relationships? For smaller nations, the message was clear. They might be left to fend for themselves if things go wrong. The sense of vulnerability grew, especially in countries that rely on US backing to balance larger powers. China, meanwhile, saw an opening to expand its influence through regional trade deals and diplomatic overtures, positioning itself as a more dependable alternative. Every US misstep made China's vision of an Asia-centric order more attractive, especially to countries eager for new opportunities and less dependent on Western powers. The risk. Asian countries might hedge their bets, seeking to diversify their alliances and reduce reliance on any single power. Deepening ties with each other and with China, they could build new networks of cooperation that leave the US on the sidelines. The US could find itself just one player among many, no longer the undisputed leader, but a nation struggling to regain lost trust and influence. This canceled deal was a crack in the foundation of US leadership, a visible sign that the old order was no longer guaranteed. As the sun rose over Asia, the region's balance was shifting, and the world was watching to see what would happen next. After the cancellation, both sides issued statements that said little but revealed much. Japan's chief cabinet secretary called for sincere and prompt US action, a diplomatic rebuke in polite language. The message: Japan's patience was running out. In Washington, Commerce Secretary Howard Lutnick projected confidence, insisting the US was ready to finalize the deal. The subtext: blame for the delay lay with Japan. The split screen was surreal. Tokyo demanded urgent fixes, while Washington acted as if nothing was wrong. The disconnect was glaring. Both sides were living in different realities. The gap between words and action had never been wider. Who's to blame? The evidence points to a series of American blunders. The double tariff mistake was a colossal failure of competence. Worse, the US failed to fix it quickly, turning a fixable error into a crisis. For Japan, the delay signaled disrespect and a lack of seriousness. Public claims about keeping 90% of the investment profits only deepened mistrust. Japan's cancellation was a hardball move, but with a flawed legal document and shifting terms, it had little choice. The US dropped the ball, then left it on the ground. In diplomacy, details matter, and competence is non-negotiable. This was a masterclass in how not to close a deal. The alliance paid the price. As of October 2025, the US-Japan trade deal is in limbo. What was once hailed as a breakthrough in economic cooperation has now become a symbol of uncertainty, with both sides waiting for the next move. The world's third and first largest economies are at a crossroads, and the outcome will shape not just their own futures, but the direction of global trade for years to come. Talks continue at lower levels, but the big players are waiting for the mess to be cleaned up. Behind closed doors, negotiators are working overtime, but without clear direction from the top, progress is slow and uncertain. The stakes are high, and every word is weighed carefully. The US must amend its order and provide written guarantees on tariffs. Until then, there's no progress. Japanese officials are demanding clarity, and businesses on both sides of the Pacific are left in suspense, unsure how to plan for the future. Both sides want a deal, but trust has been damaged. Years of partnership are now overshadowed by doubts and second-guessing, as each side wonders if the other will follow through on its promises. Japan and other Asian allies will demand more specifics and guarantees in the future. The region is watching closely, and any sign of weakness or indecision could shift alliances and trade routes. If the stalemate drags on, Japan may look elsewhere, and US credibility in Asia will suffer. Other nations are already exploring new partnerships, and the longer the uncertainty lasts, the harder it will be to rebuild lost trust. A failed deal would be a gift to America's rivals and a blow to its leadership. China and Russia are eager to fill any vacuum, offering their own deals and influence to countries feeling left behind by the US. This episode is a warning. Global economic power depends on competence and trust, not just GDP. The ability to keep promises and manage complex relationships is what sets true leaders apart in the international arena. In a connected world, one botched deal can shake the system. Markets react instantly, supply chains are disrupted, and ordinary people feel the impact in their daily lives, from prices at the store to job security. The world is watching, and the stakes have never been higher. What happens next will echo far beyond Washington and Tokyo, shaping the future of global trade and the balance of power for a generation.